You've worked hard your entire life and saved some money. Now you're ready to invest it. But if you turn on the news or look online, all you hear about is this crazy thing called crypto. And maybe you're wondering, can I still start investing in crypto at 40? The answer is an absolute yes. In fact, I'll show you why more and more people over 40 are ditching Wall Street and the bank to take control of their own financial future using the blockchain. So let's talk about how you can get started today. We want to break the myth that crypto is only for the young or tech-savvy. Sure, it might be true for most people, but not everyone. For instance, there are lots of Gen Xers and boomers who are jumping into this space. We think it's because they're tired of being nickel and dimed by banks and brokerage firms. And when they see what crypto has to offer, they jump in head first. So stay tuned. Hi, welcome to our channel where we bring you the most important news stories happening in the cryptocurrency world right now. If you're new here, hit that subscribe button so you don't miss any of our latest videos. Now let's get back to it. First up, we need to demystify the basics of blockchain and how it can work for you. So stick with us. It's actually pretty simple. Think of the blockchain as a giant public ledger that records every transaction in multiple locations, making it nearly impossible to tamper with. Every time a transaction occurs, a block of data is added to the chain. Pretty basic stuff, but very secure. Next, let's talk wallets. Hot versus cold. A hot wallet is connected to the internet and provides easy access to your funds, but it may be riskier since it's connected to the internet. A cold wallet is disconnected from the internet and offers increased security. We recommend starting with a beginner-friendly exchange like Coinbase or Kraken, which allow you to buy, sell, and store your crypto in a hot wallet while you learn the ropes. So how do you pick an exchange? Well, we think one of the most important factors is ease of use, especially if you're new to this. You want a clean interface and a good reputation? Next, you'll need to fund your account and make sure the deposit method is convenient for you. At Coinbase, for example, you can link your bank account or debit card to buy crypto with USD. And remember, it's never too late to start. With people living longer than ever, you have plenty of time to grow your wealth. So once you've got your wallet set up, what should you do next? We think it is important to note that buying and holding crypto long-term is different than investing in stocks. Let's talk about the difference. Many investors opt for a long-term strategy where they buy and hold their crypto assets for extended periods. This approach allows them to benefit from potential long-term growth without actively managing their portfolio. However, it is important to recognize that crypto markets are highly volatile and short-term. Price fluctuations can be extreme, so it's essential to have a long-term perspective and be prepared for market volatility. Some investors prefer a more active approach to crypto trading, frequently buying and selling assets to capitalize on short-term price movements. This strategy requires close monitoring of market trends and a willingness to adapt quickly to changing conditions. However, it's important to be aware of the risks involved in frequent trading, including higher transaction costs and the potential for emotional DCA is a popular strategy among investors looking to mitigate risk and potentially increase returns. It involves breaking down a lump sum investment into smaller portions and investing those portions at regular intervals, regardless of the asset's price. By investing consistently, DCA can help investors buy more assets when prices are low and fewer assets when prices are high, potentially leading to a lower average cost per share or coin. Some people ask us, what crypto should I buy? One strategy is to allocate a portion of your portfolio to a diversified range of cryptocurrencies to reduce risk and potentially increase returns. Consider allocating a percentage of your portfolio to blue-chip cryptos such as Bitcoin and Ethereum, which have established track records and market dominance. The rest of your portfolio can be divided among other promising projects. This balanced approach allows you to participate in the growth of both established and emerging cryptocurrencies, while mitigating risk. Now let's talk about scams and red flags to watch out for. Scams and fraudulent activities unfortunately exist in the crypto space. Be cautious of unsolicited investment advice, unrealistic promises of high returns, and suspicious websites or individuals. It's crucial to conduct thorough research, verify the credibility of sources, and exercise skepticism when dealing with any investment opportunity. Speaking of security, let's talk about private keys and 2FA. A private key is essentially the password to your crypto wallet. It's a secret alphanumeric phrase that allows you to access and manage your crypto assets. Two-factor authentication adds an extra layer of security by requiring 2 forms of authentication before granting access to your accounts. This helps to protect against unauthorized access and ensures that even if one form of authentication is compromised, your assets remain secure. Remember, if someone else has access to your private keys or controls your 2FA, they have control over your funds. Keep your private keys in a safe and secure location and avoid sharing them with anyone. So now you know the basics. Let's discuss how you can start building long-term wealth using crypto. There are several strategies you can employ to build long-term wealth in crypto. One popular approach is dollar cost averaging, or DCA, which involves investing a fixed amount of money at regular intervals regardless of the price of the asset. DCA allows you to take advantage of market volatility and can help you buy more assets when prices are low, while also reducing the impact of potential market downturns. Another strategy is to diversify your portfolio across multiple crypto. This approach can help mitigate risk and potentially increase returns, as you benefit from the growth of multiple assets. For example, you could allocate a portion of your portfolio to established cryptos like Bitcoin and Ethereum, and another portion to promising out. Additionally, consider investing in stablecoins such as Tether or USDC, which are pegged to the value of the US dollar and provide stability to your portfolio. Alright, now let's talk about something really important: security. We want you to feel confident and secure when investing in crypto. That's why we're here, to provide you with some tips and best practices for keeping your assets safe. First and foremost, prioritize security by choosing reputable exchanges and wallets with strong security measures in place. Use secure wallets like Ledger or Trezor to store your crypto assets offline and keep your private keys in a safe and secure location. Enable two-factor authentication, or 2FA, on all your accounts to add an extra layer of security. Be cautious of phishing attempts and suspicious links, and never share your private keys or passwords with anyone. Regularly check your accounts for any suspicious activity, and be vigilant against social engineering scams. Stay informed about the latest security threats and best practices in the industry. And be wary of individuals or groups claiming to offer investment advice or support. Always do your own research and seek advice from trusted financial advisors or experts. By following these tips and remaining vigilant, you can help ensure the safety of your crypto assets and mitigate the risk of theft or loss. Alright, so now that you understand the basics and have a plan, it's time to take action. Remember, it's never too late to start. Take the time to learn about crypto and blockchain technology, and do you want to be afraid to experiment with small investments? As you gain experience and confidence, you can gradually increase your investment amounts. It's also important to stay informed about market trends and technological advancements in the crypto space. Keep learning and adapting your strategies as the market evolves. Now let's address another common question: how will blockchain change the future of finance? Blockchain has the potential to revolutionize various aspects of finance, including supply chain management, cross-border payments, real estate transactions, lending and borrowing, and more. Its transparency and efficiency can help streamline processes and reduce costs, making financial services faster and more accessible. In addition, the rise of decentralized finance, or DeFi, is offering alternative financial services such as lending, borrowing, and investing directly through smart contracts. Overall, blockchain has the potential to disrupt traditional financial systems and create new opportunities for individuals and businesses alike. Embracing and understanding blockchain technology can help you stay ahead of the curve and capitalize on the exciting developments in this rapidly evolving industry. And last but not least, let's talk about passing on your crypto wealth to your family. We know it may seem like a distant concern, but it's important to plan ahead. Consider using tools like a crypto will or trust to ensure that your digital assets are distributed according to your wishes. Communicate your plans with your family members or beneficiaries, so they are aware of your crypto holdings and how to access them. By taking these steps, you can help ensure a smooth transfer of your crypto assets and provide peace of mind for you and your loved ones. In conclusion, it's never too late to start investing in crypto. By educating yourself, choosing the right platform, implementing security measures, diversifying your portfolio, and planning for the future, you can confidently navigate the crypto markets and potentially build long-term wealth. Embrace the opportunities presented by this innovative technology and take control of your financial future today. Thanks for watching. We hope you enjoyed this video. We really appreciate your support. Do you want to forget to subscribe and hit that bell icon so you never miss any of our latest videos? If you have any questions, feel free to drop them in the comments below. We'd love to hear from you.